In today's fast-paced financial world, staying ahead means understanding trends before they shape the markets.
Exactly. What does the Oracle AI report reveal about upcoming market shocks?
Join acclaimed analysts like David Lin and Stephan as they unpack vital insights from leading market reports and trends.
We've streamlined their hours of analysis into concise, AI-powered summaries that keep you informed without the information overload.
Discover the pivotal shifts you need to know for smart investing in the days ahead. Today, we're diving into the insights provided by the Oracle Market Analyst on the shocks created by Oracle's latest AI report.
The analyst notes that advancements in AI technology are crucial, with the potential for significant market shifts.
The Oracle Market Analyst explains that the report shows how AI is increasingly being adopted across various sectors.
This rapid adoption could lead to unpredictable market behavior as businesses adapt to new technologies. The analyst highlights that businesses are transforming their operations due to AI, leading to shifts in competitive advantages.
So the more companies engage with AI, the more we can expect changes in market rules.
David Lin discusses how the ongoing developments in AI are expected to introduce volatility in the markets.
The analyst suggests that even positive advancements may initially cause uncertainty among investors.
What future trends does the Oracle analyst foresee in relation to AI?
The analyst predicts that while immediate reactions may cause fluctuations, long-term growth is likely as AI technology matures.
The Oracle Market Analyst emphasizes that staying informed about AI developments is crucial for investors.
Investors should adopt a cautious approach, monitoring volatility while considering strategic positions in AI-focused sectors.
Today, we're delving into Stephan's analysis on what signals a potential market crash.
Graham highlights crucial indicators, including shifts in investor sentiment and market psychology that precede downturns.
Stephan identifies significant indicators that foreshadow market crashes.
Firstly, Graham points to the abrupt shifts in investor sentiment, which often signal trouble on the horizon.
By closely monitoring these sentiment changes, investors may anticipate potential dips.
Additionally, Graham discusses specific technical patterns that have historically preceded market declines.
Recognizing these patterns can provide proactive insights for investors.
Stephan emphasizes that changes in investor sentiment are critical indicators of market health.
So, higher levels of fear can precipitate a sell-off.
Exactly. Graham points out that fear often triggers drastic market reactions.
What technical signals does Graham mention that warn us of potential market crashes?
Graham discusses chart patterns like head and shoulders that historically precede significant downturns.
Recognizing these signals can give early warnings to investors.
Graham also provides historical context, noting that many previous crashes exhibited similar warning patterns.
So history can help guide current investment strategies.
Exactly. Recognizing these historical patterns allows investors to prepare better.
What predictions does Graham make about the future of the markets?
Graham predicts that by closely monitoring sentiment and technical patterns, investors can better anticipate future corrections.
Graham concludes that staying informed about market sentiment is crucial for investors.
He encourages using technical analysis as a tool to make informed decisions.
Furthermore, understanding the lessons from historical market crashes can empower investors to mitigate risk. Today, we're discussing insights from the CEO of Walmart, focusing on the economic outlook.
He highlights the challenges facing Walmart and the retail landscape, particularly regarding job availability.
The CEO points to inflation as a critical factor affecting spending power.
Additionally, he notes that job opportunities in the retail sector are becoming increasingly competitive.
The CEO explains that consumers are feeling the effects of rising prices on essential goods.
He states that these rising costs are changing purchasing decisions.
The CEO describes the job market as challenging, with fewer openings available.
He emphasizes heightened competition among job seekers.
Looking ahead, the CEO predicts limited recovery in the job market in the short term.
He warns that structural changes in the economy may result in long-term employment challenges.
The CEO's insights suggest consumers may need to adjust their budgets due to inflation.
Job seekers are encouraged to improve their skills for better competitiveness.
He also suggests that community investment can play a role in recovery. Today, we're joined by investor Clem to discuss his forecast on gold prices.
Clem believes that factors like geopolitical tensions and economic uncertainty could drive gold prices upwards.
Clem emphasizes that gold is expected to be a safe haven asset as geopolitical conflicts grow.
He stresses that economic challenges will likely push gold prices to new heights. Clem points out that historically, geopolitical conflicts have driven up gold demand.
As tensions escalate, many investors seek the stability of gold.
Clem notes that economic uncertainty drives investors toward gold.
He highlights that during troubled times, gold tends to retain value better than other assets.
What strategies does Clem suggest regarding gold?
Clem advises investors to consider adding gold to their portfolios as a hedge against inflation. Clem anticipates that given current trends, gold prices could indeed reach $4,000 soon.
He also believes ongoing market instability will sustain high demand for gold. Clem concludes by stressing the importance of monitoring geopolitical events.
He points out that gold can act as a protective asset during turbulent market conditions.
Overall, being proactive about gold investment is advisable. Let's explore Emily Brown's analysis regarding Oracle's influence on AI investing.
Emily suggests Oracle's recent results could heavily sway AI stock performances.
Emily highlights the need for a market catalyst to spur investor confidence.
David notes that lacking such catalysts, stocks might falter amid volatility. Emily indicates Oracle's role in shaping AI investment trends.
What is Oracle doing that impacts these trends?
Advancements or setbacks at Oracle may cause notable fluctuations in the wider market.
Emily remarks that current economic indicators generate doubt, possibly damping investor enthusiasm.
This caution leads traders to be wary, knowing sentiment shifts can incite market volatility.
What can we expect if strong catalysts arise?
Emily foresees significant potential for upward movement if Oracle shows strong AI results.
Conversely, what if no catalysts appear?
That might sustain investor hesitance, keeping trading relatively stagnant.
Emily informs investors to stay alert to key indicators that might guide market movements.
With AI's growing relevance, tracking Oracle's progress is crucial.
Additionally, diversification into less volatile stocks could mitigate risks.
By being mindful of market signals, investors can strategically navigate this unpredictable climate.
Today, we are examining insights regarding the repo market.
The escalation of repo fails signifies deeper liquidity issues in the financial system.
The analysis highlights the skyrocketing repo fails as a sign of liquidity challenges.
If this trend continues, it may heighten the risk of market instability.
Increasing repo fails reflect waning confidence among traders.
This situation can impact broader market liquidity.
These repo market indicators may tighten liquidity across financial markets.
This could lead to a risk-averse sentiment among investors and increased volatility.
What foreseen future risks arise from persisting repo issues?
The expectation of increasing volatility and potential threats to long-term market stability.
Investors should closely monitor trends in the repo market.
Preparation for potential volatility while staying informed about broader macroeconomic indicators is advised.
Wow, what an incredible range of insights we've gathered from our experts today.
Absolutely, each guest brought something unique to the table.
Let's start with Matt Bodnar. His analysis of the repo market. Quite eye-opening.
Yes, he highlights increasing repo fails and liquidity issues. It really does point to some potential market challenges ahead.
And then we heard from Emily Brown about Oracle's impact on AI stocks. I mean, what a pivotal time for tech.
Right, she really underscored how significant these tech advancements are for market growth.
Then, of course, Clem dropped the bombshell about gold possibly hitting $4,000.
That's a bold prediction. He ties it to global tensions. Definitely worth paying attention to.
And let's not forget Stephan and his pointers on market crashes. He made it sound so actionable.
Exactly. Predictive metrics can help investors prepare for downturns.
Now, regarding disagreements, Clem's gold perspective versus tech stocks might divide opinions.
True. And the Walmart CEO highlighted consumer behavior challenges, which contrasts with the optimism in tech.
This really illustrates the diverse approaches our experts have.
For sure. If you found these discussions enlightening, please give us a thumbs up and subscribe for more expert insights.
Don't forget to ring that bell so you never miss out on our upcoming content. Next, we're diving into global trade dynamics.
You won't want to miss it. Thanks for watching, and see you next time.